Welcome everyone to Smart Money today too. I'm so glad to have you here once again. Today we're going to look at market structure. We've already treated candlesticks and I hope by now each and every one of you has gone through the lesson. So after today or after candlesticks basics, we are going to look at market structure. Just as I said the last time, the only thing you have in front of you whenever you open any charts in the financial market are your candlesticks and any language the chart will speak to you. And it's your duty as an aspiring profitable trader to learn and understand the codes and language of the charts and also the candlesticks. So today we are going to look at market structure. What message you can deduce or you can take whenever you open a chart. So you can combine this market structure, candlesticks, and other salient tools that I'll reveal to you in the near future to make proper decisions. And trust me, your trading is gonna be amazing. So without wasting any more time, let's start the lesson. Okay, so this is my chart on TradingView. Let me expand this guy so you have clearer view of the candlesticks. We've already discussed candlesticks, so I hope for now, seeing this, you know what they means. Here I represent my bullish candles with green, and the bearish candles I represented them with black colors, right? So what is this market telling me? For you to understand what this market means, today is actually Sunday and there's nothing like forex trading yet. I have a setup here waiting for tomorrow on GBP USD. I'll be longing no matter what. I think it's going to happen. So what gave me this clue that tomorrow when market opens, obviously price will retrace small to this section and after that move upwards. What gave me the clue? Why am I so confident that this setup I've done will go in my favor? It's all because I understand market structure and I also understand the language of the candlesticks. Aside everything, I understand the overall language of the market. So to be a profitable trader is not that easy and is not that difficult. Now, what is market structure? What is market structure in forex trading? I hope you've been hearing market structure here and there. All that we mean by market structure is the movement on price. Sorry, the movement of price in a given time frame. Am I making myself clear here? We mean how price moves within a given time period. So basically there are only two main types of market structure which we are going to discuss today. One, we have what we call the trending market. Take notes. We have what we call trending call this trending markets, and we also have what we call the ranging market. So basically these are the two types of market structure that we're going to look at. We have the trending market and also the ranging market or sideways market. As we dive into it, you'll get to know. So what is a trending market? In a layman's theory, a trending market moves like this, diagonally. You see that? I'll break it well for you so you don't worry. It moves either like this or like that, right? So that's a trending market for you. And then a ranging market or choppy market moves like this, right? Have you seen the difference? Trending market may move this way or that way, whilst a ranging market or sideways market moves like this. I hope I'm talking to someone. So let's continue. When do we see a trending market? Or let's tackle trending markets as a subtopic, right? Okay, so you obviously see this picture in front of me. Don't worry to find their meanings or their names. All we got to do is to deduce what we mean when we say trending markets, right? So when we say trending markets, there are two basic types of trending markets, right? We have what we call the uptrend, right? The uptrend. That's when price starts to moves upwards, right? When price moves from a lower price to a higher price. And this is how price moves, right? It obviously moves in waves. So let's take it once again. We have two types of trending market or trends in the market. The first one is uptrend and the second one is downtrend, right? And then the other type of market that we have is the sideway or range market, which we see it here. Now let's look at how let's tackle only uptrend and we will see something. So this is an uptrend. Have you seen how it's moving? It moves like this. It has an impulsive move and a correction. Impulsive move upwards, a correction, impulsive move upwards, correction, impulsive. That's how an uptrend market moves, right? The big moves upside is called the impulsive moves, whilst the retracement, these retracements are what we call the corrections or retracement, whatever you call it. So if you want to enter this market, you are not going to enter when you see price already making this move. It doesn't work like that. You wait for price to move back. When it moves back, then you enter here and then ride this babe upwards. So that is an uptrend for you. Now let's look at a real chart example of an uptrend. Okay, so I forgot to tell you something, so let me draw your attention on here. You see, when an uptrend market is moving, it makes an impulsive move and forms a high, right? When it's in an uptrend, we call it a higher high. That's why they've represented it with HH, right? So in an uptrend, you'll be seeing a higher high and lower lows, right? Because we are in uptrend, always the higher highs will be broken. Look at something here. You see this high break this higher high, right? But the lower lows are never broken, right? Whenever you see a lower low broken in an uptrend, means the trend is obviously getting over. We'll get there and you'll see. So let's look at a raw chart example of an uptrend. All right, so what do we see here? Shout out to Shutterstock. It's through them that I had this image to be teaching you with, right? Okay, so this is an uptrend, a typical example of an uptrend market. Look at where price is coming from. Price is coming all the way from the bottom here. You see, price made an impulsive move to the upside, and here it retraced or corrected. Another impulsive move here, retracement, impulsive, retracement, impulsive, and impulsive. You see that? So that's how in an uptrend price seems to be moving. So when you are in an uptrend, you'll be seeing series of higher highs, and higher lows. That's how an uptrend market moves. So right now, okay, you wait. I'm not giving you any assignments till we are done. Now let's look at a downtrend and we will see the difference. Okay, so this is a downtrend market. What difference can you decipher between a downtrend and an uptrend? Look at it critically and tell me. Now, this is an uptrend and this is a downtrend. Look at how the uptrend market was moving and look at the downtrend. You can see that the downtrend market makes its impulsive move to the downside and then it corrects or retraces upwards. Another impulsive to the downside, retracement, impulsive, retracement, impulsive, like that. So in a nutshell, a downtrend market moves towards the downside, right? Please make sure you absorb this lesson to the fullest, most especially if you are a total newbie in this forex trading stuffs, because without these basics, trust me, trading is gonna be tough. You're gonna lose money and you don't want to be doing that, right? So this is how a downtrend market moves. So as it's being moved, you'll be experiencing series of lower highs, right, and lower lows, and always the lower lows will be broken. Always in a downtrend, the lower highs or the retracement moves upwards are never broken. So take it serious and take your notes. I wish you have your notebook and you are jotting down some points, because after we are done with everything and we start real trading, trust me, you're not gonna like it if you miss these salient tutorials that I'm taking the burden upon myself to take you through. So now let's look at a raw chart example of a downtrend market. All right, so what do you see here? Look at something here. Look at something. Right. Look at price movement from this section, right? What do you discover? We were in an uptrend, right? Now, after that, look at this section and tell me something. Look at this side here, right? What market structure is that? That is a downtrend. It's a downtrend because price was making impulsive moves downwards. It corrects to the upside, impulsive, and then upside. So all things being equal, you will be seeing lower highs, another lower high, another lower high, and then lower lows, right? Lower lows. So there may be a change in trend only when one of these lower highs is violated. That's the Dow's theory, which we will get there. Other than that, we are still in a downtrend and we expect price to be breaking these lows. I hope I'm speaking to my people, my online money making association. Please, if you are not in our billionaires group on WhatsApp and also on Telegram, you can check the description section of the video and it will be dropped there. All you got to do is to join us. So now we've looked at an uptrend, a downtrend. So what's a ranging market? Let me show you something. So basically, have you seen this guy? This guy that I've highlighted? That's what we call a sideways market, right? In a ranging market or a sideway, price doesn't move to the upside nor the downside, but it moves in a definite, something like in a defined jurisdiction, right? Look at something here. Look at the upper side here and look at the downside here, right? Price is just moving between these guys just like that, right? So this is what we call a sideways market or a ranging market. That's when you see price moving, you see that moving in a definite boundaries, right? Here price doesn't move upwards and it doesn't moves downwards. All right, so this is a real chart example of a sideway or ranging market, right? We have these highs, almost equal highs, and then lows, right? Actually, there's a way we call this. You see this line at the down here, that price hit on it and bounce upwards, and also there's a name for this which we will tackle in our next lesson. So your understanding of market structure, also candlesticks, we will also look at what we call candlesticks patterns or candlestick patterns. For instance, let me show you something here. You see that let me show you something here. Okay, let's go here. All right, let me show you something here, guys. So you see this, we were in a downtrend, right? Now price made an impulsive move to the downside and then a correction to the top side or upside. If you want to enter this market, obviously you need to shorts, right? You need to sell at the top and buy at the bottom to make profits. So when price moves to the upside here, how will you be able to know that price is now ready to come down for you to enter? If you don't understand the language of the candlesticks, you can even enter when price is here because you don't understand anything. That is why I've taken the burden upon myself to hold your hand throughout this your forex trading journey, to take you through all the basic needs. So me like this, when price reached this section, there's actually this candle I saw. It's called a bearish engulfing or bearish harami, whatever you call it. The moment I see this, I know it's obviously time for price to go down, right? And I will enter. So please, if you find value in my content, please like my video, drop a positive comment, because very soon there's going to be reward for people leaving us positive comments. Like and also share the video for others to also benefit. See you once again another time. Thanks for staying with me. Bye bye.